Welcome back to another episode of Beyond the Sold Sign Real Estate Unplugged. We are your hosts and favorite realtors, Lauren
and Naya.
And we are so happy that you are here with us this week. If this is your first time, welcome. Let's get into our story.
All right. I remember working with a client who was really excited to purchase their first home. But like many first-time buyers, they didn't have a large down payment saved. They had a steady job, good credit, and they were ready to become homeowners. But the thought of saving tens of thousands of dollars for a down payment felt impossible. That's when I introduced them to zero down payment options. Most people don't realize that this is even possible, but there are actually several paths to buy a home with little to no money down. In this client's case, they qualified for a USDA loan. They were looking in a rural area just outside the city, which met the program's requirements. This loan allowed them to buy with 0% down and offered competitive interest rates. We worked with a lender who was experienced with USDA loans and made sure all the paperwork and property qualifications were met. In another case, I had a buyer who was a veteran, and in that case, we used a VA loan, another 0% down option with no private mortgage insurance. It was a huge help to them and made home ownership possible much sooner than they expected. The key in both situations was knowing the right programs and working with the right professionals to get it done. It was amazing to watch people who thought home ownership was out of reach finally walk into a home of their own. Yes.
Yeah, I love that. Because a lot of buyers feel like they don't have the opportunity to purchase a home, especially because of the down payment and how much you have to pay. Because it's like that 20% rule that everyone is still in their head.
Yeah.
Get away from that, period.
Please.
That is not even a thing. But zero down payment is
as good as it gets.
As good as it gets. I'm like, please, can I want that. Obviously, I wouldn't qualify for VA, but if we looked at
I know, a rural area.
Yeah. Which actually would be nice. And USDA considers a rural area 25,000 residents or less, so it has to be less than 25,000 people living there, and it can't be adjacent to a larger city.
Right.
So I guess that is in Maryland. They said Eastern Shore, Western Maryland, Charles County. These are just places in Maryland. So they have a map. Don't they have a map, USDA?
Yes. So they have a property eligibility map. So if you're in this area or, willing to go to those counties that Lauren just mentioned to find a rural area that's away from Baltimore and DC, but somewhere in the middle of Maryland, use USDA's property eligibility map where you can actually search a property address and see if it's eligible for that loan. And that's right. You could just sit there all day being I'm going to go down this list so I see, which one what area is going to qualify. Man.
Because less than 25,000, I feel like it's not
that's still
horrible.
Yeah, that's still a lot of people. I mean, we're in a very densely populated area, but I still feel 25,000. That's enough still.
That is enough. Yeah. And I feel like if you don't have to go into the city to work.
Yeah.
Then if you work from home, maybe you have to go in maybe once a week or every other week, then that would be ideal to be able to purchase a home, no down payment, and kind of get away from the city. Because some people don't want the hustle and bustle either of the city. So they're I already have to go there for work once a week or whatever. Then you can kind of get away and have your own, space and privacy in those areas.
Yeah.
Because I wonder, I guess that would also allow you to have land as well.
More land, probably more privacy.
Yeah.
You might even find it feels the cost of living might feel cheaper in those areas as well. It's probably slower and less hustle and bustle for sure. So
absolutely.
I think I'm going to pull up that map and just, see what's out there because
it has to be. And so USDA has income limits.
Right.
So if you are trying to use that, you cannot make any more than $122,050 if you have 1 to 4 people living in the home. But if you have 5 or more people living in the home, it's $188,000.
Okay.
So you actually have that. You just have to look to see what your income is. If you are trying to do it maybe with a spouse or someone else, maybe just doing it on your own. And that way, if you okay, I don't make more than, 122,000 and there'll be 3 people living here, then you will qualify.
Right.
But if you and your spouse try to do it together and you make over that, and there's only 3 of you living there, then you would not qualify. So you definitely want to check those limits, the income limits, and make sure you can, use that program.
Right. Absolutely. And then so for the VA loan, which you definitely work with a lot.
Yes.
0 down for folks who are a veteran themselves or a surviving spouse.
And service members.
Yes. So it would not, if you are the child of a veteran or grandchild or cousin, it does not qualify you, unfortunately, to use that loan.
Yeah, no, sorry. Just survivor. So if someone, passed away and you are the wife or the husband, then you would qualify for that 0%. And then no PMI for VA is huge. That's something that falls off usually, if you have a conventional loan, but it's there if you're not putting 20% down. And FHA, same, doesn't necessarily fall off for FHA, but so it's pretty much there. VA, you don't even have it at all.
That's
so that
awesome.
Helps.
Saves you
on
your mortgage.
You have no idea until you start looking at the numbers, how much money that's saving you. So you're saying 0 down payment for VA and then no PMI.
And PMI is private mortgage insurance.
Thank you.
And so if you're using conventional or FHA, you will have PMI applied or, added into your mortgage payment as a insurance, a protection for the lender.
Yeah. Yep. Mm-hmm. Yep.
So if you're using a VA loan, you won't be paying that fee, but everybody else you will, until you have 20% equity in your home. And then make sure you call them, please, to request it to be removed because they'll let you keep paying it.
I know I would.
Yeah. So beware and mindful of where you're at with your PMI and your equity so that when it is time for you to stop paying it, you can save yourself those coins.
Yes, because it can be a big monthly payment. Yeah, for sure. Having strong credit, still having good credit. Don't feel like, oh, I qualify for this USDA loan, this VA. You still want to have strong credit. That really helps your interest rate at the end of the day. So that's still a big one. So I would recommend still making sure your credit is where it should be when purchasing a house. So I would say 680 and above. Yeah. Some people will probably say 640, but if you want the best interest rate, then I would say 680.
Right. Absolutely. And then in addition to that, we're talking about, these are $0 down payment costs, but you still will be responsible for your closing costs. So make sure that while your down payment will be 0, make sure that you're saving and budgeting for your closing costs still. Yeah. Which is usually we usually say budget between 5 to 8%, 3 to 5%. Yeah. Cause generally if your down payment will be around 3%, the closing will be another 3 to 3 to 5%. Yeah, 3 to 5%. Usually max 8% altogether. Right. But if absolutely. You, like Naya said, if you don't have a down payment, then you'll be more in that 3 to 5% range. Yeah. So still save for that for sure. Yes. Then there's other expenses that come. Still got to do your appraisal. Still should have an inspection. So using these programs are an extreme benefit, but we don't mean don't save for anything or a rainy day. So, still be prepared otherwise. But yes, using this program will save you a good chunk of money and, feel like you're alleviating some of the cost in your overall purchase of the home.
Yeah. And if you're wondering like, oh, like what lender do I call? Any lender to help me with that? I mean, personally, I think we would work with a lender who does these type of loans often.
Right.
So that way they know kind of the ins and outs and they're up to date with things.
Yes.
Because sometimes, you know, if a lender just doesn't do it often, they may not know, you know, what's coming down the pipeline. They may not know if something is now outdated or new. So we would just say to work with a lender that has experience in this.
Absolutely.
For USDA and VA. That way you can get the right information.
Yes.
So, and your realtor should be able to connect you with a lender that does have experience in this. If not, then you can definitely do your own research. But I know a lot of like my VA clients work with their credit unions bank. They may go to like Navy Federal or something, like, which is fine. Like, absolutely. Because I'm sure they give you the best rates. And then some may go with a lender that's just local, especially with USDA, because they really know what they're talking about. So.
Absolutely. So go ahead and pull up that USDA property eligibility map, play around on there, research, explore. If you or your spouse is a veteran, you know that is an option for you as well. But we hope that you are feeling excited and motivated about the opportunity to maybe have zero down. Thanks for tuning in with us for another episode, and we'll see you next week.
Yes.